Now, Nigeria's equities market snapped its losing streak, rising 0.35% on Tuesday. Investors digested recent earnings reports, with Cornell leading the gainers up by 9.96%, and Dangote Sugar and Vitafoam saw declines. Now, the all-share index closed at 98,225.63 points, with market capitalization reaching 55.553 trillion naira. Over 552 million shares were traded for 14.92 billion naira. Now, GTCO, FBN Holdings, and Access Corporation were among the most active stocks. Let's quickly look at the numbers, starting with the all-share index, to have an idea of how well the Nigerian bourse performed yesterday. Yes, so you have the ASI there, 98,225.63 in closing, with a slight increase of plus 0.35%. So we look at market capitalization now. Let's see the effect on that. We see it around the 55 trillion threshold. Of course, a huge difference from what we had at the beginning of this year, where it was around 59 trillion naira, but now it has been dwindling for a couple of weeks now, and now we have it at 55.55 trillion naira. Now, before we look at the top price gainers, we'll look at the top movers for yesterday. Now, looking at the top movers, we have GTCO topping the charts, 245.46 million naira, huge one. FBNH with 45.47 million naira. Access Corporation 42.87 million naira. Transcorp and UBA 39.1 million naira, 22.45 million naira. And you can see the value right there, 7.95 trillion naira. All in the range of trillions, except for the bottom three, which is about in the millions in terms of value. And this actually means that these stocks traded significantly yesterday. And it also means that probably there is some sort of market sentiment or investor confidence tilting towards the stock. We now look at the top movers, or the top gainers for yesterday. We have Lena Africa that closed at 3 naira 30 kobo, UACN closed at 14 naira 85 kobo, NACO 36 naira 30 kobo, CAP PLC 28 naira 60 kobo, and Corn Oil closing at 99 naira 95 kobo. We look at the percentage differentials there in the double digits, aside Corn Oil, that is just plus 9.96%. We now look at the top losers. Looking at the top losers now, we have Dangote Sugar closing at 38 naira 90 kobo, CWG closing at 5 naira 05 kobo, Vitafoam, Honeywell, and UPL. Well, you have it there, 17 naira 3 naira 15 kobo, 2 naira 26 kobo, and differential in a deficit of minus 9.95, all the way down to UPL with minus 9.60. Quite a marginal loss there, and those are the losers there. Before we go, we look at the sectoral performance now. We have the banking industry, well, with a marginal increase of just about 1.70%, followed by, of course, we have insurance, just about 15%. Oil and gas marginally rose with 1.07%. For we have the consumer goods, 80%, industrial goods also at 35% in a drop. Now, this all means that in all that has been happening in the Nigerian bourse in the last couple of days, there's a bit of resilience, a little bit of growth. For some investors, it might just mean well for them, but when you look at it overall, it is just a slight difference from what we have been talking about as we've been tracking the NGX for quite a while now. And that's it on Market Update. We'll go on a short break to now look at our first conversation for the day. A new report by the Nigerian Interbank settlement system reveals a worrying trend of increasing financial fraud across the country. Now, the report covering the period from January to December 2023 shows that while the number of fraud cases dropped slightly, the actual losses incurred by the financial institutions rose significantly. So this morning, we'll be delving deeper into the findings of this report and see which states are mostly affected, what channels fraudsters are targeting, and how individuals can protect themselves. And to help us do justice to that, I have Kikelomo Shodeko, who is a risk consultant. Kikelomo, thank you so much for joining us on Business Edge, and happy Workers' Day to you.
Yeah, thank you so much. It was really funny how you started. To those that have
Of course.
Jenny work, funny. Yeah, good morning.
All right, thank you very much. So let's get into it now. We're going to look at it from, state by state, but then let's do a clean sweep for now. Now, we have a Lagos that has the highest overall fraud accounts. Any particular reason as to why other states like Abuja, Cross River also saw a significant increase in actual losses, despite a decline in cases?
Okay, I can say this for sure. So, if you look at the interbank data itself, like their report, it's very exciting because pictorial data gives you a better understanding. So there's this part where they show the map, right? And that map in itself tells us how commercial activities are happening in the country, and so it shows you where those incidents are the highest. So you see that the map is redder where there are a lot of commercial activities. So you have places like Kaduna, Kano, you have Lagos, you have most of the southwest and all of the southeast and south regions that are closer to the southeast. So that basically just shows us where commercial activities are happening the most, right? Now, to the reason is that there are a lot of people, just like I said, commercial activities. So there are a lot of people doing a lot of commerce in these areas. Banks are always very active in these areas. And so that is why we are seeing a lot of fraudulent activity along those lines. So basically, that's it. Commercial activity will definitely pull in a lot of fraudulent activity at the same time. Is like basically not being able to throw away the baby with the bathwater, right? The baby's been baited, but you can't throw away the baby when you're done baiting the baby. So that's how it goes. So commercial activities really, really attract a lot of also fraudulent activities, especially where there are no checks and balances in place, And of course, as you know, the report, we'll go into the report. It's so exciting to see. I get really excited by data because it gives us a better understanding of what we're looking at. Thank you.
Yeah, so talking about data and still looking at Lagos, we know that it recorded the highest values of fraud accounts. 46,224 cases were recorded in 2023 from 45,952 in 2022, indicating about 40% overall. Now, it has an actual loss of about 49%, though it was able to cut down the losses by 12% to 8.7 billion naira in 2023 compared to 9.9 billion in 2022. So when you look at the difference, will you say that Lagos, in a way, has been able to, well, in a way, tried as much as possible to curb these fraudulent activities, or you still say that the margin in between is still insignificant?
Yeah, so I'll start with this. One major thing we always have with data is underreporting. So we have a case where customers that have been affected by these fraudulent activities get to a stage where they're not even reporting, or they are reporting, but the people that are supposed to take the report are not filing as they should. So that's where data get exciting, right? So you will get people that will report, and sometimes that data is not recorded or it's recorded, but because the problem has been found, there's been a solution, it's been cleared, right? So as we know, most of the banks have had to expand their reachable channels. So most that used to be only via calls are now having to do WhatsApp messaging and all that. So with that will mean that whenever there is a solved case, I don't think that report translates into fraud as a whole. I think it's just seen as, okay, it's been solved, so there's no need to report it as fraud, right? That's one. And the other is that the people themselves, when they are faced with this, some give up and they'll be like, oh, if you report at the end of the day, it's not like my money comes back anyway. So why should I report? There's no need to. So underreporting is a major, major, major issue. Now, I will say with this data, it shows something that the crooks have become smarter. So they're going for the people with the average higher amount of money rather than going for the number of people. So rather than targeting a larger pool of people, they're targeting people with higher percentage of money. Yeah, so that's where it is. So if we notice, the data for 2022 tells us that there were more people that were affected by the fraudulent activity, but the amount that was lost was lesser. But for 2023, there were lesser people, just like you said, But now there was more money being taken away from people through fraudulent activities. So that is the play on it, right? I'm looking forward to the 2024 data, but already we can see that the crooks are getting smarter, the criminals are getting smarter. That is, rather than go for the number of people and go for a lot of people, no, target the higher income people, people with higher savings, people with higher money in their accounts, and that, I think that's where the issue is. So we see that difference between 2022 and 2023. Thank you.
So would you also lay the blame at the feet of these banks? Because we hear that about 2.4 billion naira internal fraud was also recorded. And of course, it's been speculated that whether or not these criminal elements might be smart, there might just be some workers inside or within the system that are helping to allow these criminals to pilfer away people's money. So is there a possibility that we cannot overrule?
Yeah, no, that's a certain possibilities, So the thing is this: the only reason I'll keep my money in the bank is because I believe the bank will keep my money. Really, that's it, right? Most people are forced to use the banking system because there's no other choice, right? As you know, the government is going into its policy of no, the cashless policy, where you have a reduced use for money, physical money. You begin to use all types of channels to make sure that your money gets from point A to point B. Doesn't matter. We don't want to use cash no more. That's the policy. That policy has been ongoing for decades, right? So the idea is, if the government's policy is to push people into the banks need to, get their acts together, like the security, everything, get the right group of people for cybersecurity, get the right physical security managers, get the people that are all about the risk analysis and all that, the fraudulent analysis, bring them all together so that you have something solid, so that so you can advertise and say, to your last 5 naira or 5 kobo or 1 kobo, your money is safe with us, right? Banks seem to have moved from that and really focus on profit. So we do have that amount of money going internally. That is, the bank staff themselves are taking advantage of the lacune, of the flexibility, of the freedom in which they have access to information of customers, and they are taking people's monies. I can tell you that for free, that is one issue. And the banks themselves can tell us that most of the time they've had to put people under a lot of investigation because money is missing from a customer's account, and it can be traced to a staff, So that in itself shows that the staff in the banks are themselves moving. That's a lot of money. 2.4. That's a lot of money to be moved internally from customers. And sometimes some customers that are deceased, their families don't have access to their funds. That's another way the bank takes away people's money without them knowing. So some have family members that are deceased, and those family members don't have access to those bank accounts and information and things like that, and so that money just goes poof in the air, right? So those are part of the things that the customers face, that the banks themselves cannot assure customers that, we've got your money, we'll take care of your money, and be assured that whatever has to do with your money, to your last 1 kobo, we'll take care of your money. So for me, that's a major issue, where the internal staff are also as complicit as the external criminal. And of course, as we know, they're selling data. Data is being sold currently by anybody and anyone, right? So if you have your data out there, be certain that it's being sold to the highest bidder or to even the lowest bidder, depending on how much the person needs the money or how much the person is in dire straits, So that's it, really. Thank you.
So earlier on, you were talking about how these fraudulent criminals are able to perpetrate their crimes and navigate through the wings and the windows of the Nigerian banking industry to actually corner people's money and steal away that which they've kept within the banking industry. And earlier on, I actually lamented issues around the security checks that are meant to protect consumer funds, but this has not been the case. What am I talking about? We're talking about KYCs, know your customers. We're talking about OTPs, transaction limits, and some other form of security checks that are meant to prevent fraudulent activities within the banking space. And of course, we still have a situation where these banks actually default on CBN directives. But then we have a CBN that's meant to be a check on banking activities, and we have other regulatory bodies that are meant to also oversee the activities of the banking industry. So where is the miss? Why is it that despite these protocols and firewalls, we'll still have this monumental fraud within the sector?
Okay, so like I said, right, fraud cannot totally be eliminated in that way. Why? Because we have a situation where when there are commercial activities, when there's a cacophony, there's a lot of noise, there's a lot of business activities ongoing, right? There will be scenarios where money is being moved from point A to point B. For whatever reason, it can be taken from people. It can be that a negotiation went right or wrong, and that money was moved before the negotiation was done. There's so many scenarios to put into consideration fraud. But for me, the thing that most that I think that is most annoying in the whole situation is that it affects customers. So I remember that I was having a discussion with a group of people, and we're talking about how banks themselves can red flag customer spending, right? So, for example, your customer opened their account, say in Ikeja, right? And the address shows that the like their house address shows that they live also in Ikeja, right? Then you see transactions in VI. Now you notice that the transactions are consistent in VI. You can have like a group of people that will say, okay, let's say this transactions in VI means that this person works in VI, for example, right? And so that's that for that, right? Then suddenly you see there is a transaction. For years, transactions have always been between Ikeja and VI. Then all of a sudden you see the transaction in Ogun State. That should immediately pick up a red flag. That there should be a ding ding ding, right? Like I said, right? There should be a system where that customer, the customer's money is much more important than any other thing. Each customer is important because the more the government moves into a cashless policy, the more it is a prerequisite for banks to consider that they need to begin to monitor some things, right? So the moment you notice, oh, Ogun State, there should be like a text or a message, for Yahoo, for example, or for Google, right? If you suddenly are using another device to open the account, what do? They send you a message, right? So why can't we have that for customers in the banking sector, right? Because of the banks made a lot of profit all through COVID, right? So what's going on that the banks cannot consider their customers that important to make sure that they have those kind of checks on behalf of the customers. Now, let's put the bank and their issues aside. Like you said, we have a lot of firewalls. The CBN is there, the interbank payment system is there. But the truth is, we know how Nigeria is. There is too much happening at the same time, right? There's too many firewalls and too many, like they say, too many cooks spoil the broth. There's too many firewalls that you can't monitor who has the last access to make sure that the person is not defrauded, right? You can't monitor that. That's
Of
true.
course. So,
When there are
so sorry, Kikelomo, sorry to just quickly butt in here because we're actually out of time. So what can be done to ensure that?
Yeah. So what on the interbank did that, so we have the different prevention methods.
Okay.
Oh, might we point out that most of the fraudulent activity that we've recorded this between last year and this year has been via mobile, right? So now we don't need the ATMs to be fraudulent anymore.
Okay.
Just by transferring money from your account from your phone is possible, right? So to do that, I think one of the things is to make sure that there are checks. There are 2, 3, 4 checks when it comes to social engineering. So when all that information that we've given to the banks should be able to request something out of the ordinary before people's monies are being moved from their mobile account, for example, right? So if a person loses their phone, that doesn't mean they lose all their money, right? That's one. The other thing is the interbank systems gave us the different prevention methods already, and I really, really urge us to move to look at that report. It's very, very enlightening. So one of the things that will require the bank to do is make sure that they put in checks for the customers. Let there be an extra firewall for the customer to be able to say, no, I did not request this. Yes, I requested it. Or when there has already been a fraudulent activity, a customer should be able to say, yes, this wasn't me. It wasn't me. It was someone, my phone was stolen and this was what happened, and so on and so forth. So if that can happen, for me, I am very customer centric. clientele centric, and if they can do that just for the client, that would be great for banking for the clients in general. Thank you.
Well, for the customer, they would even prefer that whether or not they lose their funds, those funds should be traced and should be recoverable. I think that about settles it for them. Well, Akelo Mojodeko, risk consultant, thank you so much for sharing your thoughts and insights with us.
The pleasure is all mine. Have a fantastic working day.
And you too. Artificial intelligence is rapidly transforming the world of finance, and one of the most exciting areas is generative AI. Now, these powerful models are like financial detectives sifting through mountains of historical data to uncover hidden patterns and connections. By harnessing this newfound knowledge, generative AI can generate trading signals, identify promising investment opportunities, and even help develop more robust strategies. Today, we will delve into this fascinating world and explore how generative AI is changing the game for investors at all levels. So from London, UK, I have LME Atigolo, a managing partner, Generative AI Consulting. Thank you so much for joining us on Business Edge.
Thank you. Thank you for having me.
So generative AI sounds powerful, but can you give some specific examples of how these models are currently being used to develop robust investment strategies?
Yeah, really good question. And you're quite right that generative AI as a whole is very powerful. Now, how these models are actually being utilized within inside of the investment and asset management industry is generally in a few areas. So one is in summarization of data. So generative AI does very well in its ability to understand data. And so the more data that's actually given, it can be used to bring out different insights in that data. So whether that is reviewing earning calls and bringing out information, reviewing details of financial documentation and bringing out insights that can be used within inside of the financial investment industry.
All right, that's actually brilliant coming from you, LME. But then, are there certain asset classes or probably markets where they are particularly effective, or you would say that this is one size that fits all?
Yes, really great question. So when we look at the different asset classes, what we are seeing is in the areas of equities, in the areas of hedge funds, and also in the digital currency aspect, those areas are quite good for the use of generative AI. And one of the reasons that we see that is because of the inefficiencies in these particular sectors and asset classes. So in the equity sector and also the hedge fund sector, and what we also see in digital currency sector. So they do very well in utilizing generative AI to identify those inefficiencies that can be used to generate alpha.
Well, it's quite interesting the sophistication that generative AI is given or making available for those who are in need of it. But then I'd like to also look more into the models. Of course, we know that generative AI is quite very, of course, optimal in terms of its delivery. But then can it go beyond identifying patterns and correlations to predict future market movements? Or are they better suited for risk management and just portfolio optimization?
Really great question. So what we are seeing is the use of generative AI with other models as well and other AI technology to be used not just in the data analysis, but also into predictive nature. So being able to synthesize information to then predict what outcomes that could be in stock price, that could be in earning calls, could be in price earnings, for example. So we are seeing the use of generative AI in that environment. So not just in descriptive, but also in predictive and prescriptive aspects.
So probably we need to tie that to how it affects humans who have, of course, been at the vanguard when it comes to securities and their investments. Now, while AI can, as we know it, analyze vast amounts of data, how does it integrate with the experience and intuition of human investors?
Okay, great. What we are actually seeing is the role of generative AI at present is actually used to complement the human capabilities, so not to replace humans. So how we are seeing the use of generative AI in these industries is the ability to provide insights to advisors and the human investors that they can then decide and use that information as a start of their either bottom-up position on identifying particular investment opportunities, as opposed to the generative AI or even large language models being used to actually make the final actionable decision.
That's quite interesting. So, are we looking at a future where AI completely replaces human decision making in the market? Like, I could just initiate the process, go to sleep, and expect generative AI to do all the workings, the calculations, do the predictions, make the decisions for me, and I earn at the end of the day. I smile to the bank, and I'm good.
That's really great. The things that we are seeing, and some of the developments that we are seeing, is in the areas of automation and autonomy. So agents, essentially, where financial agents can carry out tasks. However, I believe we are still a little bit away from, just sitting back and relaxing. I think that AI can do a lot of those aspects that you mentioned on an autonomous position, but I feel that the final aspects will still be used from a human trigger. There may be some automation in terms of trading aspects that we are currently seeing where automatic trade signals are in place. But I think the full remit from start to finish, I think there will still be the need for human intervention at certain points through the process.
So, LME, let's take this back a bit. You might want to agree with me that historical market data can reflect past biases. So, how do generative AI models address these biases to ensure their investment signals are not skewed?
Yeah, really great. And you're quite right that the historical data does have biases. And generative AI itself also has biases because of the way it's actually been designed and trained. Now, what we are seeing are specific data sets, so data sets that have been cleaned, data sets where biases have been removed. And we've also seen data sets that have been developed by diverse teams that can help to ensure that the actual models themselves remove the biases. And then you're able to run these models on the data that can identify biases inside of the data. By removing that bias, you can then have more of a clean analysis where you're just looking at the facts as opposed to biases that could influence the results.
Part of these biases are the unpredictability of the markets. And of course, it's been said that the markets can be volatile, swinging either ways without the foreknowledge of those within the play or those to be affected by this. So when we have unforeseen events causing major disruptions like geopolitical tensions and what we have in the market and other market dynamics, now how well can the generative AI models handle these issues? Of course, we were looking at the historical patterns and scaling it down to what obtains now.
Great point. You're quite right that when you look at the investment market overall, it's not just linear positions. There are different aspects that have an overall impact. What we do see with the benefit with generative AI is its understanding and its ability to synthesize vast amounts of data. So whether that might be geopolitical data, it could be social media and posts, it could be earning calls. All of that information can help to run predictive analysis, can also run alternative strategies and options, hypothesis examples on what can happen with a particular stock or a particular industry. That can help to provide an investor with information to understand, well, what could happen in different scenarios. And that's where generative AI and also the use of large language models can be very beneficial in this environment.
But it's been speculated that generative AI models can be complex. So how do you think that investors can understand the rationale behind the trading signals generated by AI? Is there a level of understanding that can be achieved, a level of transparency where people are able to interface with these models, interpret it, understand how it plays so that they can make final decisions, of course, with the help of the AI?
Yeah, and that's one of the areas that we are seeing quite a lot with the area of explainability in AI. Now that can be it's quite difficult at the moment, especially with generative AI, because of the way these models have been trained and developed. But we are starting to see different technologies that can either support the use of generative AI, where you can actually see into the model's decision-making process, how it came about, its overall outcome. That can be quite beneficial. We are also seeing different models and creations that have been developed that use a different structure, where you have more transparency in the base of the model. So if from the very beginning there's transparency in the model in terms of how it makes its decisions, and you can see that, that can help with the explainability on the other side. When it comes to any type of decision, especially in investment, it's important to understand how those decisions were made, and that's good for both the investor and also those individuals inside of the space itself.
And I'm still talking about transparency. I'd like to find out because we see that AI is gradually playing a bigger role in the market now. And of course, should we be concerned about probably issues as regards manipulation? Do you think that these models can be used ethically and responsibly? Because we're not too sure if we have regulatory bodies that can monitor these processes and ensure that they are in line.
Yes, regulation is a key aspect, and the use of ethical considerations. We've seen that in other areas where generative AI is being implemented, and finance is exactly the same, and even more so, even important as well. What we are seeing is regulations start to come in place. We're seeing that across Europe. We are also seeing that in the US and further afield as well. Now, when it comes to regulation, there are some issues in that AI overall is moving at very fast pace, and sometimes it's outpacing where regulation is today. And so collaboration between the developers themselves, so the developers of the models, those big tech companies, and the regulators can really help with that downward motion to the investors. So ensure that when it comes to the use of generative AI within inside of finance, that it's still ring-fenced within inside a financial regulatory infrastructure. So it doesn't matter if you're utilizing an AI tool, the same aspects of, regulation, ethical behavior within inside of finance still needs to be in place. And we are starting to see that now.
All right. Well, talking about penetration and acceptability, we see that generative AI, of course, sounds promising, and quite a lot of people might be wanting to be onboarded on this. But then, of course, it's a technological provision, a technological advancement, but we still need to consider the possibility of accessibility. Is it going to be only for investors, or is primarily the domain of large institutions? But then you would also want to look at it from the angle of rural areas, cosmopolitan areas, urban areas, areas that are well developed, underdeveloped, and all those who do not have internet penetration. Looking at all those bottlenecks and the factors, do you think that generative AI will be able to penetrate and be available for use for these demographics?
Really good point. One of the things that we are seeing at the moment, that yes, it is a lot of the large institutions that have access to the resources. These models take a lot of power to run. And so often you need a lot of the financial resources to be able to run these models. However, what we are seeing is a lot of what they call model as a service, whereby companies and firms and individuals can access these models without having to own the overall infrastructure. And they normally do this on a per token call or per API call ability, so that they can get access to these models. And in terms of more rural areas, we are seeing further development that these use of these models can be utilized in tools that we already use, so mobile phones and so forth. And that can help with the actual distribution of this technology so that it's more available to more people. This is a point in time where AI can be in the hands of the everyday individual, the everyday investor, and we've not seen that in any time in the history.
Okay. Elemi Atigolo, Managing Partner at Generative AI Consulting. Thank you so much for sharing your thoughts with us.
Thank you. Thank you.